Good afternoon and welcome to the 658th meeting of the Economic Club of New York. I'm Barbara Van Allen, President and CEO of the club. It's an honor to be here with all of you in our milestone year of 115th anniversary. So it's a long time, and honestly, the club has been the nation's leading nonpartisan forum for discussions on economic, social, and political issues for a long time. So I'm pleased to say more than 1,000 prominent guest speakers have appeared before the club over that last century, and we have a very strong tradition of excellence, which carries forth to today. A special welcome to members of the ECNY 2022 class of fellows, a select group of diverse, rising, next-gen business thought leaders. We also have joining us graduate students from NYU Stern School of Business, CUNY Graduate Center, and Rutgers University. So welcome all. I'm honored to welcome our guest today, Jaime Leverton, the Chief Executive Officer of Hut 8. Jaime's passionate about advancing high growth and future forward technology companies, most recently serving as the Chief Commercial Officer at eStructure Data Centers. Her 20 plus years of leadership experience also includes driving revenue programs as General Manager of Canada and APAC with data center and cloud provider Gico, I'm not pronouncing that right, Pier 1, now Aptum. Previously, she held leadership roles with National Bank, BlackBerry, Bell Canada, and IBM Canada. She sits on the boards of the Stratford Festival, Tech Nation, and ComKids, and serves as the chair of M Women Canada. The format today will be a conversation, and we're very fortunate to have Bloomberg's crypto reporter, Hannah Miller, as our moderator. Thank you, Hannah, for joining us. We're going to end promptly at 12:45, and any questions that were submitted to the club from members were shared and may be addressed during the conversation. In addition, we'll be using the chat box today during the conversation. So please enter your questions directly in the chat box for their consideration based on time permitted. As a reminder, this conversation is on the record, and we do have media joining us. Hannah, I'm happy to pass this time over to you. Thank you.
Thank you so much, Jaime. It's great to meet you. I'm so excited that we get the chance to connect today.
Be here.
Yes. So the first question I had is just sort of like an introductory one. I wanted to hear sort of about the origin of Hut 8's name and how that plays into your operations as a crypto miner.
Yeah, so great question. Hut 8 refers to the hut number, the building number at Bletchley Park, where Alan Turing worked within the war in the cryptography unit and built cryptography that went on to help break some of the code that helped to win the war, and also created the foundation, the cryptographic foundation on which the blockchain and Bitcoin was ultimately born. So it's very much an origin story back to Alan Turing and the Turing machine and Hut 8 at Bletchley Park, which is actually it's still there. So it's now a museum, and you can go and tour Hut 8 in Bedford in the UK.
Nice. Yeah. And speaking of Bitcoin, you guys are obviously really bullish on it. And I was curious to hear more about that. I mean, there's a new cryptocurrency every day, it seems. And even with your Ethereum mining, you get your payouts in Bitcoin. So I just wanted to hear a little bit more about your commitment to this crypto.
Yeah. So I think I think we view Bitcoin as really a cryptocurrency that stands alone and apart from the rest of the field. I'm a big believer in a lot of the other blockchains. I'm a big believer in Web3 and the incredible innovation and excitement and development that's happening and will continue to happen in the Web3 ecosystem. So I'm bullish on both sides, but I think with respect to Bitcoin, it really stands apart. Bitcoin is ultimately the hardest store of value that we've ever seen in the history of man. what differentiates Bitcoin from the rest are kind of a few key properties. The first being that it is truly decentralized. As I'm sure you know, Hannah, the originator of the white paper, the author of the white paper, goes by the pseudonym Satoshi Nakamoto. We don't know who that is or who they are. They're completely anonymous. And the Bitcoin blockchain runs without any centralization whatsoever, which is different from the other projects out there in that we know who their originators are, and many of them are still involved in the projects today. The other thing that's fundamentally different about Bitcoin is that math is law. So the Bitcoin blockchain was released. It is essentially an algorithm. Everything is predetermined, including the number of Bitcoin that will ever be in circulation. There are 21 million Bitcoin that will ever be in circulation, with the last one coming to be in the year 2140. So that's over 100 years from now. And for those wondering, we have just over 19 million Bitcoin already in circulation. So the fact that it has a predetermined number of units gives it a very, very hard sort of value. Again, unlike any we've ever seen before. The closest would probably be gold, but we actually don't know how much gold is out there, both mined and unmined. Whereas with Bitcoin, we do know the number. And then the other property I would add is Bitcoin is built on a proof of work system. So it's a number of miners and validators that are spread across the globe. And ultimately, what it is an open peer-to-peer ledger that allows for triple entry accounting, really the first ledger of its kind, the first advancement in ledger technology, if you will, in many hundreds of years. And so its properties are incredibly unique. It is, again, the math is law, and the magic is in the first of its kind, open and transparent global ledger.
Awesome. Thank you for that. And, you mentioned being a big believer in Web3. I guess, how do you reconcile, being a huge Bitcoin supporter and also being a supporter of Web3? Because we've seen among, some really pro Bitcoin people that Web3 is a dirty term.
Yeah. So that's, look, it's a great question. My background, as Barbara alluded to, is in the traditional technology space. I spent 20 years at a variety of different companies, really focusing on traditional technology, data centers, cloud, managed services. And then I stepped into this world of Bitcoin and Bitcoin mining to begin with, which is really also high performance compute. A Bitcoin mine is an industrial scale data center. It really isn't more complicated than that. And what I'm super bullish on as a technology operator and innovator is these worlds coming together, having a digital asset, high performance computing center live in the same stack or within the same entity as, in our case, we now have 2 tier 3 geo-redundant traditional enterprise data centers that can help not just support our customers that are legacy Web 2 customers, but the innovators of the ecosystem of Web 3. And I think in order for Bitcoin to reach its maximum potential, it needs Web 3 to also reach its maximum potential. These things are inextricably linked. And further adoption in one side will naturally fuel further adoption in the other side, and that's why we believe so strongly in both and supporting both. We are actually the first public company in history to hold Bitcoin on balance sheets. So we've been holding Bitcoin on our balance sheet since well before Michael Saylor made it famous, and continue to do so, which again just speaks to our belief that over time Bitcoin will continue to appreciate up and to the right. But I think having a strong Web3 ecosystem and all the promise that brings only furthers the Bitcoin rate of adoption.
Yeah, and switching over to mining, what do you think is the biggest misconception surrounding crypto miners?
I think there are certainly a few. Probably the biggest one right now is about the energy used by Bitcoin miners. That's a really hot topic right now, and you see a lot of kind of bold headlines around it. And just for context, I think it's important that Bitcoin uses energy in a fundamentally different way than any other industry does. We use roughly the same energy globally that Christmas lights do. Just to give it context, we also use roughly the same amount of energy as Norway, but most people probably didn't know Norway used as much energy as Christmas lights. It's all about how you're putting things in context. But the magic of a Bitcoin miner's energy use is that it's actually a flexible load. So I can use our mining site in Medicine Hat as a great example. The city of Medicine Hat is an independent power authority, which means it supplies its own energy for the use of the city. But as you know, for most populations, they use a certain kind of base load energy, but then on a hot summer day, air conditioners kick on and a peak amount of energy is required. The same thing on a very cold day or when storms blow in. There are lots of reasons why an energy grid goes to peak demand. And the nice thing about a Bitcoin miner that's industrial scaled like ourselves is we are a flexible load, which means when the community needs the power, we can shut down in less than a minute, feed the power back to the grid for as long as the grid needs it. When they no longer have that peak demand requirement, we boot back up. And so that grid is always kind of working in harmony, where we're moving the load where it's needed, but the energy is never wasted and it's always being appropriately monetized or consumed.
Yeah, no, and I understand that you guys want to be carbon neutral by 2025. Is that correct?
Yes, that's correct.
Yeah. How do you plan on going about doing that?
Yeah, so we're doing lots of different things. Of course, offsets play a part of it. We're based in Alberta. So for those of you familiar with the province of Alberta, historically heavily dependent on natural gas, and increasingly investing, much like the grid in Texas, in renewables. So lots of solar development happening there, lots of wind development. But as that transition takes place over time from fossil fuels to more renewables on a grid, we offset the delta where there's carbon involved.
Nice. Yeah. And you gave that, the analogy of Christmas lights and Norway. Obviously other industries use energy. Why do you think there's such a fixation on crypto and its energy usage?
You know what? That's a great question. And I think any disruptive new technology receives this criticism in the beginning. I was spending some time with a friend earlier who recalled when email first came out, and there was a huge uprising from the U.S. Postal Service about the energy being consumed to send emails, and email was going to boil the oceans. We needed to put a stamp tax on email. The same thing happened when the smartphone first came out, because the smartphone, of course, needs to be charged. That uses a bunch of energy. Smartphones were going to boil the ocean. The internet was going to boil the ocean. All technological, like mass technological revolutions have to tackle this conversation about the energy usage. Because if you're going from something that didn't exist to something that does exist and requires energy, it's a debate. And ultimately, the debate is about value. It's about, is Bitcoin worth the energy of one light bulb or 10 light bulbs? Is it worth anything at all, any energy at all? And I think that the 6+ billion people across the world that are in need of access to the banking system, access to financial sovereignty in a way that isn't available to them today would tell you, yes, Bitcoin has supreme value.
Yeah, and I know you guys have an Ethereum mining operation as well. I mean, why was it important for you to get exposure there?
Yeah, great question. So we different miners have different philosophies. We run our own operations ourselves. So it's our own staff that runs our sites 24 hours a day, 7 days a week. We maintain and manage all of our own infrastructure. And we've actually expanded that. So we now also maintain and repair Bitcoin mining infrastructure for other miners across North America and Northern Europe as well. So we're a very operational focused organization. We like to control our own destiny as much as we possibly can. And Bitcoin mining uses a type of compute called ASICs. So it's a unique compute. It's not technology that you would find in a traditional data center, whereas GPUs, which are used for mining Ethereum, you would find in a traditional data center. GPUs are used for gaming. They're used for visual effects, rendering, and artificial intelligence and machine learning. GPUs are a regular form of compute used in traditional data centers. And so I thought it was really important for us as a team to start to understand that compute, to learn how to run it, to maximize the efficiency, to repair it, to maintain it. Because ultimately, I had a vision and we had a vision to move into the more traditional data center space, which we've now done with the announcement at the end of January. We purchased 5 traditional data centers across Canada, all with emission-free power sources, by the way, just to that carbon neutral by the end of 2025 point. And so really having a team on both sides that was familiar with how to get the most out of this infrastructure as we think about being a platform to support this convergence between these two worlds. I thought it was a great opportunity to get ahead of that, and the teams just performed incredibly well.
Yeah, I believe in March, Ethereum mining made up 13% of your production.
That's right. The beautiful thing about mining Ethereum is the power used is much lower. Yeah. And that's really a function of GPUs versus ASICs have a much different power profile. And so by mining the Ethereum blockchain, but getting paid out in Bitcoin, it allows us to essentially mine a Bitcoin for less than $3,000 Canadian, which is obviously great margin considering where Bitcoin's trading at spot.
Yeah, and with Ethereum, there is this planned transition to proof of stake from proof of work, which would eliminate mining. What's sort of your plan there for when that happens?
Yeah, so that has absolutely been in the works since, I believe, 2017. The target date continues to push out, but eventually, I do believe Ethereum will go proof of stake. And then again, the beautiful part about GPUs is they do all kinds of different things. They can mine Ethereum, they can mine any other proof of work blockchain that uses GPUs, or they can move to other workloads. We purchased the GPUs as CMPs directly from NVIDIA, and we worked with Dell to build out enterprise grade servers that house the GPUs, and those servers can be used for all different kinds of GPU based compute. And so I think we've got lots of optionality on what we do with that compute if and when Ethereum goes proof of stake.
Yeah, and with purchasing GPUs and other equipment, have you guys faced any pressure from supply chain constraints?
Yeah, I mean the supply chain is really tricky. There's no denying that. I think one of the things we're super proud of is our relationship with MicroBT. As I say, we don't just maintain and repair our own MicroBT equipment, which is the second largest tier 1 producer of ASIC mining equipment in the world, but we also repair for other miners across North America and Northern Europe. And so having a preferred relationship with a strategic partner, I think has been really advantageous for us. We also pride ourselves on taking a balance sheet first approach to the business. We're very opportunistic on when and how we deploy capital. We've done a good job as a team so far in not deploying capital at the wrong price point, at the wrong point in the cycle. And I think that consistent deployment of capital at the right times has allowed us to kind of always have machines coming in, but never feeling like we're out of sync with the economics.
Yeah. And, we've seen North America really, come to prominence as a hub for crypto mining, especially, after the bans in China. But now we've seen talk of miners actually moving to other regions like Scandinavia and the Middle East because of, maybe looser regulations and access to cheaper power. You guys are a very Canadian company. Would you ever consider locating mining operations outside of Canada or North America?
Yeah, so we will again, we like to be opportunistic, and that extends beyond our borders. We haven't yet seen the right thing that took us outside, but that's not to say that it might not come. Mining's been happening in Scandinavia for years. They've got a great climate for mining. They've got access to lots of hydropower. So they're a really good geographic location for mining naturally. I think what we're seeing across the world is more and more local interest for Bitcoin mining and getting access directly to Bitcoin within multiple jurisdictions. The U.S. On the back of the China ban of mining it is the largest mining region in the world. So I think one of the nice things about this Bitcoin network is, for example, China banned mining, and the network, we lost half of the network hash rate within a very short period of time, and the network didn't blink. And you do see mining operations shift around geographically, and we have since the beginning of mining. But the nice thing is it shifts to cheaper power. Cheaper power tends to be more renewable power. We're in Canada. One of the reasons we love Canada is that it's cold. So we get to take advantage of Mother Nature for our cooling, meaning we're not paying incremental CapEx and ongoing OpEx to cool the equipment because the cold Canadian winds do that for us. And certainly Scandinavia has that asset as well. So I think again, the geographic shifting is kind of part of the magic, and that shifting ultimately over time continues to drive a higher renewable mix and more grid stability, which is good for all of us.
Yeah, and within Canada, I mean, how do you work with regulators, I guess, to educate them about the industry? Maybe clear up some misconceptions about crypto mining?
I think one of the great things about Canadians is we tend, at all levels, we tend to be quite curious. Again, Ethereum was born in Canada, in Toronto, so there's been great curiosity and a lot of work done in educating oneself about the space, really at all levels for the past certainly 5 years since 2017 when that last run started and we started to see public vehicles born into the Canadian markets. So we continue to do that. We continue to have consistent dialogue at all levels. Obviously, it's important for the local communities to be involved. We've been blessed to have the mayors visit all of our sites. We're working with the municipal government. Canada has a lot of there's a lot happening at the federal level as well. There's a lot more talk about Bitcoin and blockchain in all circles, but it's certainly from a great place of curiosity and wanting to figure out how to support without stifle. And I think that's all we can hope for is that the education happens and innovation is continued to be supported.
Yeah, no, and I guess just looking at your business operations, you recently had a partnership with Enthusiast Gaming in providing data center services to them. Can you tell me why you were interested in gaining exposure to gaming?
Yeah, it's a great question. So Enthusiast Gaming is another Canadian public company that also trades on both the TSX and NASDAQ. It's another, Canadian tech story that no one's heard of. We're both kind of in these spaces. We're on the leading edge of innovation and still trying to get people to learn who we are and what we're up to. When we made that move into buying the data centers from TerraGo, and of course we were already into the high performance computing space with the GPUs for Ethereum, we just see there's a huge opportunity for gaming in Web3, blockchain games, NFTs within games. And we wanted to partner with somebody where we could really explore that ecosystem with somebody who was coming at it and really, really understood gaming. And we really, really understand digital assets. And we've got this infrastructure that supports developers in these communities. And it's also a way for us to connect with our audience in a new and really exciting way. So Enthusiast has built their first game that ultimately is going to have embedded NFTs, EV.io, which is super exciting. They've done a Hut 8 branded skin within the game, and quickly it went to the #1 downloaded skin. So we know that there's excitement for both of these platforms within the community, and we want to work with the community to figure out how to build infrastructure that really speaks to them and supports the needs of these new development activities.
Yeah, I mean, there has been some backlash about the use of blockchain and NFTs in gaming, and some in the gaming community are very vocal about this. Do you have any concern as to whether this could negatively impact the use of blockchain in gaming?
No, I think this is exactly why we're doing it. We want to have a conversation. We want to learn, where the hot buttons are, where the turnoffs are, how we can partner in a way that makes sense for the community and isn't alienating and gives them a tool that really connects with what they want and isn't all focused on token economics and speculative token appreciation, those kinds of things. This is all about how do we look at it from a way to enhance the value of the in-game experience, and the best way to do that is, I think, to work with people that are right there, and not to presume that we know what they want.
Yeah, no. And what other industries are you guys interested in tapping into?
Well, I mean, we're so thrilled with the customer base that we have through the acquisition. We've got a really broad mix of industries that we work with and support already. I think we're just going to see as we focus more and more on the high performance computing side of the business. I think we're going to see more and more excitement coming in from media and entertainment and gaming and AI and machine learning. There's so many great projects out there that are kind of crossing over as well, that I think having this GPU infrastructure at scale and then again geographically dispersed is going to be really interesting.
Yeah, and you've touched on the TerraGo acquisition a bit. Can you tell me a little bit more about what prompted it and how you think this is going to help Hut 8 move forward?
Yeah, I mean, well, of course, my background's in data centers and cloud, so it's the world that I came from. And after being in the chair here at Hut and really living in the Bitcoin mining world, it's been a year and a half now, I really saw a path for these two worlds come together. Like it seems an inevitability. There's so much that we can do between these infrastructures in leveraging what works really well on one side, what works really well on the other side. When you think about a traditional data center environment, there's usually idle and available white space and power capacity, and it's idle because it's waiting for the next customer workload to come in, and they're kind of always building for future growth. But that means that there's kind of this idle capacity that sits there waiting. And I think for people that use GPUs to do other things for ourselves directly, that can provide an opportunity to monetize that white space that's otherwise idle for our own mining activities. And then when customer demand comes in, of course, you can pivot to whatever workload that demand comes in for. But it means you're driving up the efficiency of that data center. You're driving up the efficiency of the investment in those assets. And again, I think more efficient data centers drive better power economics and better power efficiencies. And that's ultimately in everyone's best interest as well.
Yeah. And do you have any other planned acquisitions for either additional data centers or mining equipment?
As you know, I am a public company, so I would just answer that we are, we take an opportunistic view to growth. We are always looking at growth, whether it's organic or inorganic.
Yeah, no. And would you ever consider tapping into any other sources of revenue? For example, we've seen some mining companies, do call options on Bitcoin prices, things like that.
Well, we actually do. Again, we have over 6,300 Bitcoin on balance sheet right now. 1,000 of those Bitcoin are in a yield account with Galaxy. Another 1,000 are in a yield account with Genesis. They're two strategic partners of ours. So both of those yield accounts allow us to earn a rate of return on a monthly basis. So we're able to put some of that Bitcoin to work without exposing it. So I think as we see more and more new institutional counterparties coming into the space, we're seeing increasingly sophisticated products that involve less risk. And I think as that continues over time, there's going to be so much opportunity for people that have Bitcoin on balance sheet to use that Bitcoin to help grow the business without having to sell it down.
Yeah, I mean, why do you think there is this growing interest from financial institutions in Bitcoin and crypto?
Well, look, I think the backdrop of inflation right now is certainly a part of what's fueling the broader interest. I think there's a lot of use cases globally that you can't really ignore Bitcoin as something that's been here now 13 years. The blockchain's been actively running without ever a hiccup. And now we have two countries that have brought on Bitcoin as legal tender. So I think the momentum keeps building, and it keeps building in different ways across the globe. Different use cases are driving different reasons for adoption. But I think all of this is coming together, and momentum feeds momentum.
Yeah, and I was curious if Hut 8 was part of any, industry coordinated efforts, I guess, on putting together policy or educating, the rest of the world about mining. We saw the creation of a Bitcoin mining council over the summer. So I was curious if Hut 8 was a part of that.
Yeah, I was lucky enough to be one of the founding members of that, which is a great story. Michael Saylor and myself and 6 others formed that council. And really it came out of a conversation that we had with Elon Musk, and ultimately felt like we needed a coordinated way to educate and deliver information, gather information about our industry. And we're incredibly proud now. We've got over or just at 50% representation of Bitcoin miners globally are part of the council. And through that, we've been able to get the data out that shows Bitcoin mining uses between 58 and 63% of the energy used is renewable. And then again, a large portion of that would otherwise be wasted. So I think it's done a great job in allowing for more education, more transparency from the industry. I mean, of course, we still have a ways to go, because there's still a lot of misinformation out there. But I think that's been a big win for the space.
Yeah, I mean, what do you think is the biggest challenge now facing the space?
I think it's ignorance. I think it's we still face a lot of noise about Bitcoins for criminals. It's for money laundering, and that's just people that don't understand. I would argue that an open public blockchain that anybody can see any transaction that's ever been done to the history of time is probably the worst thing to use for illicit activity. And we've got tons of examples that prove why criminals should not use the blockchain, because we can see where the Bitcoin moves, and then ultimately freeze the wallet, as we saw with the Colonial Pipeline attack. So I think it's ignorance and misinformation. I think that's the biggest threat, whether it's energy or illicit activities or whatever it is. It usually boils down to people just not understanding what this really is, and ultimately the magic and the capability to do so much good in the world.
Yeah, and we have a question from the audience. What's the best way to get educated for someone who has little knowledge of blockchain and crypto?
Oh, I love that question. The best way is to start with a book. The book is called The Bitcoin Standard. The author is Sefadine Amos. You can get it on Amazon or download it to your Kindle. It is the best place to start. It starts with what is money and the history of stores of value, and then it brings you all the way forward to what is Bitcoin solving for, and it touches a little bit about other blockchains and gives you enough of a foundation that then you can explore from there. I think too often people are drawn to this space because something in the hype cycle has attracted them, whether it's the metaverse or Bored Apes, or there's something, and to come in at that level without starting at the basement can be completely overwhelming. There's a lot of jargon in this space. I think that's probably one of the things we may have done wrong as an industry. Some of the words we use, even mining, I think mining can turn people off because it has a negative connotation sometimes, and what we really are is a data center. But anyways, our jargon is our jargon, and we can't undo it now. But I would just say the Bitcoin Standard, again, is the best place to start. And then there's tons of great podcasts and lots of other things you can do after that. But for me, that's what I always recommend as the greatest place to start.
Yeah, there's so much out there. I think it's like the challenge is deciding, what to focus your energy on.
Mm-hmm.
But yeah. And here's another question. How should we reconcile the concept of Bitcoin as a store of value with its volatility, which is something that gold or fiat currencies generally don't experience?
Well, they don't experience it in such a blatant way. But if you look at what a dollar will buy you today versus what a dollar would buy you 50 years ago, I think that's heavily volatile to the downside. But more directly, there are two ways that I would look at it. I would look at the risk-adjusted rate of return for Bitcoin annually over its inception, and I would look at it from a time preference perspective. The day-to-day volatility is what it is. It's a nascent store of value. It will take time to find stability. But so you have to look at it over a much longer time horizon that you would traditional stores of value. But ultimately, I think you need to look at the risk adjusted rate. You need to take a hard look at how much you think that dollar's worth and how the dollar or gold has been able to hold its value over time or not hold its value over time.
Yeah, I was actually going to ask, there is this volatility. There are rumblings that we are headed for crypto winter. The price of Bitcoin has been significantly lower since hitting its all-time high of $69,000 in November. I mean, what's your plan here if we do head into a winter?
Yeah, I guess I asked kind of what is winter like, and the signals are so funny. They're so mixed because we have, again, momentum feeding momentum. You have all of this incredible adoption happening in really significant ways on a month over month basis. And there's no sign of that slowing down. From a Bitcoin mining perspective, the network just hit a new all-time high last week. So there's no slowing down of investment. The industrial scaled miners at these levels are still very, very profitable. Mining equipment itself has different modes. So you can, if you need to ratchet your equipment down, reduce the power consumption, you reduce the output, but you also reduce the cost. So that ability is also built into the equipment should winter last an uncomfortably long time. As I mentioned, we were born in a bull market. We survived a bear market. We thrived in the last bull market. So we take a balance sheet first approach. We have a large stack of Bitcoin that's unencumbered. We have very low debt. We have these diversified revenue streams. So I do want to make sure that we're able to protect the business over time, regardless of cycle. And all of the things we've talked about today are the reasons and how we're doing that. But I don't think we're headed for crypto winter. I think we've been trading sideways all year. And I think the fact that we've been trading sideways actually shows that we're holding value in an incredibly volatile time in other markets. And again, I see so many positive momentum signals, but we're prepared for either scenario. And I think as stewards of capital, you always have to be prepared for either scenario when you're in an industry this nascent.
Yeah, and any concern about, I guess, more Bitcoin miners popping up in the space, providing competition to HUD 8?
New miners are always popping up. It's the beauty of the network. It's attracting capital, and momentum's attracting new capital. I think the biggest surprise for all of the miners participating last year was the ban in China, which basically took all of our profitability up by double almost overnight. So that was a surprising to the upside last year. But hash rate is always going up over time. So that's just part of the business.
Yeah, and here's another question from the audience. Bitcoin's use as a store of value, given its limited supply, makes sense. How do you think it will evolve in terms of its original goals to be a medium of exchange? And how might that be challenged by central bank digital currencies, particularly if the Fed issues one?
Ooh, I love that question. I think central bank digital currencies are amazing. I think they ultimately further adoption of Bitcoin in particular, because what a central bank digital currency does is the value proposition, what it's solving for, it's not in competition with Bitcoin. Bitcoin is the only global store of value. Bitcoin trades 24 hours a day, 7 days a week, and is transferable to any country in the world, again, seamlessly and with next to no friction. Central bank digital currency doesn't do that. A central bank digital currency still lives within the borders and is ultimately still controlled by a central authority that can drive inflation and in an authoritarian regimes can impact your ability to truly hold property and maintain property rights. So again, I don't think a central bank digital currency in any way dilutes the value proposition for Bitcoin. I think if anything, it spurs further adoption.
Yeah, no, I was listening to a panel with Cathie Wood yesterday, and she said, this like CBDCs are the biggest concern right now, that, the US is at risk of being left behind. So I was curious if you either shared those sentiments or if she felt she was right.
I think Cathie's right more often than not.
Well, thank you both. This was just a terrific conversation. And we enjoyed having Cathie Wood too, is actually part of all this. And I do think that book sounds good for everybody listening. Can you give the name of it one more time, Jamie?
Yes, it's The Bitcoin Standard.
Okay, great.
Again, on Amazon, Kindle. Yeah, The Bitcoin Standard. You can Google it.
Terrific. So I wanted to just share with our members and guests that we have many more great speakers lined up this spring. As always, we encourage you to invite guests to our events. Next up, we have Ed Hyman, the founder, chair, and head of economic research at Evercore ISI, May 5th. Dana Suskin, the professor of surgery and pediatrics at the University of Chicago Medicine, on May 9th, about a new book. John Rogers, the chair and co-CEO of Ariel Investments, will be with us, and that'll be an in-person hybrid event May 16. Tony James, formerly of Blackstone, now chair of Jefferson River Capital and Costco Wholesale Corp., will be joining us virtually May 24th. Nicole Elam, the president and CEO of the National Bankers Association, will join us virtually June 6th. Arvind Krishna, the chair and CEO of IBM, will be joining us in person in a hybrid event June the 7th. Brian Cornell, the CEO of Target, also an in-person hybrid event, will join us June the 21st. And finally, although of course we're always adding, but June the 27th, we will have our Peter G. Peterson Leadership Excellence Award, where we'll be recognizing 2 recipients this year for the first time. So, and I'd like to take a moment too, just to thank those of our 346 members of the Centennial Society joining us today for their contributions that continue to provide the financial backbone of the club and enable us to bring forward the diverse programming that we offer. So again, thank you, Jamie. Thank you, Hannah. And I hope everyone has a nice rest of their day. Thanks.